See what'll be better here. Don't know why the screen is flickering. Let's see if I can switch that. All right, everyone. Good afternoon, good morning, good evening, good whatever time it is, wherever you are. My name is Ness, and I am a trader. I have been trading for, it's now 11 years, and I did not find success or profitability until year 10. So when I say I know what I'm talking about, I know what I'm talking about. This live isn't for everyone. It is only for people who, well, technically, you could sit in if you want to, if you don't fit the criteria, but it's very specifically for people who have been trading for a long time and you've tried every strategy under the sun. Let me flip the camera around so you can see me speak. You've tried every strategy under the sun, but unfortunately, nothing seems to work for you. You've tried everything. You've learned about money management, you've learned about how to handle your risk, you've learned about psychology, and yet for some reason it just isn't working out for you. So this live isn't for everyone, it's specifically for those people who have been trying for a long, long time, and you're wondering what's wrong. The reason I am specific about this is I need you to know that if you came here looking for who's going to tell you that you're going to win every single trade, I'm not the one. I'm not going to sell you that lie. I'm not going to tell you that you can buy a Lambo tomorrow. I mean, it's not impossible, but I'm not here to sell you those dreams. I'm not here to sell you on perfection either. I am here for you if you have come to a place in life where you understand that you must give room for things to play out in your favor. This is not the space where I show you, oh, look at this 1 pip stop loss that you can use so you can have a 1-to-70 risk-reward ratio. No. I mean, I could show you that, but I will not because I have learned historically that that is not the way. I will also tell you from the jump exactly why it is I do what I do. It will be a blend of not just the charts, which I will show you first, but also mindset, identity. And this is the part that a lot of people click off from because they don't want to watch. They don't want to learn that. And I was one of those people as well. And I regret to inform you that I regret that deeply, a lot. There's no day that I don't regret that because if I had understood the importance of mindset, the importance of identity, the importance of spirituality, and some of you will click off at this point because you feel what does spirituality have to do with trading? Your whole life is spiritual, whether you're an atheist or not, whether you're a Christian, I don't care what you do, who you are, everything is spiritual. If I had not been so arrogant and full of myself when I was much younger, I definitely would not have spent 10 years trying to figure this out. It wouldn't have taken me this long. Trading is a profession that you come to that will reveal to you exactly who you are. And if you are not ready to accept the truth of who you are, and make the shift that is required, you will not make it. I can give you a strategy that will give you a 96% win rate, or 94, depending on what you are trading, and I will. The problem is that even with that, you can and you will fail if you have not made the shift. And what do I mean by the shift? It has come to my attention through a lot of sweat, a lot of tears, a lot of depression, anxiety, and wanting to myself, that if you do not define who you are as a person, if you do not decide, if you do not shift your identity from struggling trader, from learning trader to one who is good, you will never ever succeed. And this is the part that most people do not want to hear. It's not sexy, it's not pretty, but it is the truth. Whatever it is you want to do in life, everything that I'm going to teach you, maybe apart from the stuff on the charts, is going to be something you can apply in whatever it is you're doing. Maybe there's some other endeavor that you've been struggling with. Maybe it's not even an endeavor like how to make money. Maybe it's just how to better or improve your relationships with other people. Unless and until you shift your identity, as in who you are, who you know yourself to be, you cannot get the results. A lot of people, they want to first start with, they want the thing that's going to give them the profits. I can feel some people from the front page probably saying, stop talking already and give us this winning strategy that you've promised. Unfortunately, you will not succeed with that mindset. You may succeed for the short term, but in the long term, something's going to happen and bite you in the ass. People want profits first. You don't understand that it is your identity that brings the profits. Because when you first begin to identify yourself as a winning trader, the next thing that happens is the way that you think starts to change. The way you think about charts, the way you think about strategy, it starts to change. When your thinking changes, your behavior follows. Your behavior also changes. So you find that the things that you used to do that always sabotaged you, and again, since I'm speaking specifically to those who have been trading for a while, you know what it is. I don't have to tell you what your weakness is. You know you better than I could. I'm just a stranger on the internet. But you will notice if you come from the identity of a winning trader first, what's going to happen is before you take a trade, there's going to be that thought that pops up like, why would you want to take this trade in the first place? Haven't you seen the same thing play out before and it played out in a way that was not in your favor? Then when the behavior shifts, what happens? The outcome shifts. What is your behavior? It is your processes. It's how do you, when you look at a chart, how do you engage with it? How do you interact with it? I'm not here for everyone. I'm not interested in a huge like count. I'm here specifically for the people that I said I was talking to. And because that once upon a time I would have killed to have someone like me sitting in front of the camera telling me all the things I needed to know. And so even if it is only one person that I have from start to finish in this live, I'm very content as long as it is for you. The message is for you. And I'm telling you right now that even if you feel like you are a losing trader or losing whatever other profession it is, I need you to begin to approach things the other way around. Identity first. Identity first, meaning that you have to identify yourself as a winner first. Because what that does is it reframes the way you see things, the way you process things. It's now like, how does a winner look at this chart? How does a winner handle this trade that is in drawdown? How does a winner, do you understand what I'm trying to say? But it has to come from their identity first. All right? So I'm speaking specifically to those people. Please pay attention. I will start with the charts, first things first, and then we will, from the in-between, we'll go between charts and then talking about the how and why, the mental of it. Because if we don't do it that way, I know a lot of people don't have the patience for that sort of process, and that's fine. It's not for you. Find some other guru or teacher. I'm not a guru. I just like to teach for fun. So this is the thing. If we don't do it that way, you'll just have yet another person in front of a camera telling you yet another strategy that works until it doesn't work. You won't understand why I do what I do, because it's not about the strategy. You could take any strategy and use it and it will work. You could take any risk management process. You could do negative risk reward ratio, positive risk reward ratio, and it will work until it doesn't. And then you don't understand why it's not working. You are not just trading the charts, you're trading your internal conditions. That's what you don't understand, or you may not have understood until this point. See, I will never open a chart if I'm not feeling certain of myself inside. There's something I've been saying in my most recent content, which is that I am luck. Luck is not something outside of you. You make your own luck. And I know it sounds crazy because when I was much younger, I used to think to myself that luck was outside of you. Luck is not something that you can control. Luck is very, very random. But as time has shown me, I am actually in a position where I can say that I am luck before I even open the charts. And what that does for me is when I open a chart, if I see something and it looks like my trade, I will take it. If there's even a tiny little question mark about whether a trade is going to work out or not, I will not touch it. Why? Because if I have decided that my identity is luck, that my identity is successful trader, that my identity is a winner, guess what? There would be no coherence between that identity and the action of just, oh, I open any chart, I take anything I see and I hope for the best. I do not hope. The second I feel like I'm hoping a trade is going to work out in my favor, guess what? I'm going to close that shit. In the first place, I wouldn't open it, but let's say I opened it and I thought it was going to go in my favor and now it's looking weird and now I start to feel like I'm hoping. No, that doesn't track. It doesn't track. Because if I know it's going to go, then I should know it's going to go, right? If I know it's going to work out, then I should know it's going to work out. And that's what lines up with that I am a winner identity. That's what lines up with I am luck identity. It's the same thing if you have relationships with people and they're, you want to make them better or something. You start off with a premise that makes it so it is impossible for you to not enjoy those relationships. Example, what is the premise, the identity here? What is the identity? I am love. If I am love, then it stands to reason that I am loving in my actions, in my thoughts, in everything that I do. And it stands to reason that I am also loved. And what's going to happen is if I'm living my life day to day from that premise with the people that I interact with, which is not a lot, I'm a bit of a hermit, but if I live from that point, guess what's going to happen? If I was struggling with anyone, and I've had this happen time and time again, that struggle will be resolved. The relationship improves because I'm operating from that decision that I am being love. I am being a lover. That is who I am. So once you get your I am straight, then you go and do the thing. It's not do the thing to become the thing. Do you understand? You be first. It is be. You be it, then it comes. Become. You do not first do the thing and then you wait for the outside world to prove to you that, oh, this is who you are now. No. You first acknowledge that it already is in you. I know we're getting metaphysical here and, maybe I'm losing some people, but that's fine because who this is for is who it's for. By the way, I'm going to upload this on YouTube as well. It'll be there for as long as it's there until it's not. So if you see it on YouTube, I advise you to just try to download it or something. But the thing of it is, you have to be the thing first before it comes. We've been taught this whole thing, this whole life thing ass backwards. You already are the thing. If you have a desire for something, if there's something that you crave, you want to accomplish, you have a dream, it is not something in the future. It is who you already are. That's why you were able to perceive it in the first place. Your life from the present radiating outwards is actually you remembering that you're already the thing. So I need you to please, as we go to the charts, do not outsource your power to me. I'm a very regular person, very unremarkable person. There's nothing special about me. I don't have 5 heads. I have one. It might be a little bit of a messed up head in certain regards, but I have one, right? There's nothing special. What I have done, you too can do, and you are going to discover it. My thing is always going to be, I need you to know that you already are successful. If you start with that premise and apply yourself to anything, you will find that for yourself. So enough talk. Let's flip this around so we can go back to the charts. All right, so I'm going to start from the very beginning. Pardon my screen, this is a very old laptop, but it still works, so I have no intention of changing it or anything. Anyway, let's start from the top. First of all, I need you to know that my focus is on Forex, okay? I love Forex. The only thing I will touch outside of Forex is the US 500. Okay, that's the one index that I like. S&P 500, some of you call it the SPOOS, whatever you want to. That's the only other thing that I look at, and I don't do so all that often. I personally love Forex. It's where I got started with binary options before I moved to Forex, right? So I don't need to walk you through the fact that it's $1 trillion industry, blah, blah, blah. You already know what that is, okay? But what I am going to do is present you with a framework to start looking at charts that will help you discover what it is you need to do. Because if you're sick and tired of having to guess, this will help you, right? So let's start from something I always talk about. I'm going to stretch this out here and then give me a second to change the font so that it's easy for everyone to see. Let's make this red, let's make this bold, and let's make this, I'll say 14. 14 should be large enough. So when it comes to trading, there are 3 things that you need to know. Thing number 1, I'm going to make this larger. I feel like it needs to be larger still. Give me a second. Right click, let's do 18. Thing number 1 is, where is the money coming from? Thing number 2 is, where is the money going to? And thing number 3 is, there enough room between these 2 places to take some for myself? These are the 3 questions that you need to ask yourself before you open up a chart. This is assuming that you've already sorted out the thing I mentioned at the start, which is the identity thing, right? Understanding that you are a winning trader, therefore you will only ever make decisions that will work in your favor. So these are the 3 questions here. Where's the money coming from? Where's the money going to? Is there enough room between these 2 places to take some for myself? Now, these 3 questions are very simply answered with what we call a range. Some of you may already know about like the candle range theory or whatever it's called. Let me just type that out here. It's a range. So there are many different ways to create a range, but what exactly is a range in the first place? A range is a series, a series of prices. That's what a range is. In other words, let's see. Let's take a look at this price action right here. It's a series of prices. If I look at each of these bars, mind you, what you're looking at right now is called a range bar chart. It's not your regular Japanese candlestick chart. Why do I like this? Because it cleans up the price action much better. So I want you to take a look at all of this mess, which I will go ahead and highlight here for you before I switch to a different chart. So look at this. Look at how this is. Up, down, up, down, up, down, and then eventually you have that movement there. And then I'm going to take this to, I don't know, let's say a 15-minute chart. Maybe a little bit too low, but let me zoom out and you can see that's a lot. Let me take it a little bit higher. Let's say it's a 1 hour. See all of that price action? That's a lot. That's the same thing that I highlighted. But if I'm using a range bar chart, suddenly all of that mess is cleaned up. What is a range bar chart specifically? So it is a price-based chart. A price-based chart meaning it doesn't matter how much time passes. If this bar, because this is a 50 pip range bar chart, if it takes 50 days or 127 days for the market to move from this high to this low, then that's how long it'll take before a bar forms. So what happens is basically where on a price chart you would have this sort of erratic movement. Let me get my line here and draw that for you. So on a price chart, you may have stuff that goes like this, like this, like this, and this, and this, and that, you know, all that confusion, right? That's terrible drawing. I'm using a mouse, pardon me. So if on a price chart you have that, with a range chart, you just have this very clear price action. All of that could be within this one single bar here, within each of these bars. So that's why I prefer this. A second reason that I prefer it is typically when I get, because this is a large enough range movement for this pair. This is EuroCAD that we're looking at, right? EuroCAD 50 pip range bar chart is typically more than enough for me to decide what it is I'm going to do. When I'm looking at this, it simplifies everything. It's cleaner, it's clearer. So it's kind of like a Renko, but the difference between this 50 pip range bar chart and a Renko, let me take you to a Renko chart. I'll take you to a Renko 50 pips. We have to wait for it to populate for a bit. Give it a bit. I haven't opened this in a while, bro. This is a 50 pip Renko bar chart, and as you know, it's also price-based. So the difference between the range and the Renko is, you can see this Renko here, there's no wicks. In other words, there's no high and there's no low. So what that means is, look at this bar, for instance. This one, it opened here and then it closed bearish here. There is a possibility that the market opened here and pushed lower before going up, but you won't be able to see that with a Renko bar chart. You won't be able to tell. That's the difference, the main difference between this and a range bar. With a range bar, you can very, very clearly see, okay, this is where the high is and all of that. And that's very useful information. So let's come back to the range. I said this is a range bar chart. What is a range? It's a series of prices from the high to the low. That's all that it is. Why is the range important? Because the range will let you know where the money is coming from, where the money is going to, and if there's enough room between those two places to take some for yourself. So this money in question is what you hear ICT or other teachers talk about as liquidity. So anytime you hear someone talk about liquidity on your, I don't know, whoever's talking about it, don't let them confuse you. It's just, where's the money? Where's the money? That's it. Already, if I say nothing else to you, and this is all I say, where's the money coming from? Where's it going to? Is there enough room between these two places to take some for yourself? That should be more than enough for you to make profits. But now what I'm going to do is get even deeper, right? So that you can understand where I'm coming from. The reason you need the range, a series of prices from high to low or low to high, doesn't matter. Low to high, I'll just put that for the benefit of some of you. Right. Why do you need the range? Because you need the range to help you find the money. Why do you need to know where the money is coming from? Because you need to know that the money is not going to, let me explain this to you. Let's start from here. There's a little something ICT teaches, which is the premium discount array, right? So I'm going to take this one bar. Let me highlight that, and I need to change the color of this. 1 second. I need a rectangle. Why isn't that clicking? What's happening? Give me a second. I'm trying to figure out what's going on with this. Okay, so that's clicking. What's going on with my rectangle? Rectangle. Okay, cool. So let's take a look at this. I'm going to highlight from this top here to the bottom, and I'll change this to something transparent so everyone can see. Switch that to white. What are we doing? Switch that to white and make it transparent. Cool. So I don't know if that's clear enough. Okay, that's better. So I'm marking the high and the low of this. That's a range. It's a range of 50 pips. You don't need to use a range bar chart. You can still do this with the normal Japanese candlesticks if you want to. The point is to mark the high and the low. Or for some people, they use the open and the close. Whatever I'm teaching you will work regardless of what pair you're trading, what strategy, I don't care. It's the same concept. I'm not here to change your mind about your strategy. I'm here to show you how I think about price, or a new way to think about price that will help you more often than not to succeed. So now you have a range, and there's this little thing we call the premium and the discount. What does that mean? So this red line here that I've put, that is 50% of the range, or the halfway point of the range. Everything that is above 50% is called the premium, right? And the thing about the premium, let me type that out just for your benefit. Premium. I'm going to change that. I need to make it bold and make it, etc. Make it bold and make it 20. So this is the premium portion of the range. And down here, you have the discount, everything from 50% below. The 50% point itself is called equilibrium. Okay? The idea is simple. When you are in a downtrend, please pay close attention. When you are in a downtrend, or you are in a bearish retracement within an uptrend on a high time frame. Why a high time frame? Because that'll give you enough movement. Even if it's just a retracement, there's more than enough for you to take something for yourself, and that's key. When you are in a downtrend or within a bearish retracement in an uptrend on a high time frame, you want to be selling from the premium portion of the range. You want to be a seller. Remember I said the premium portion is from this 50% upward. When you are in a bullish trend or you are in a bullish retracement within a larger time frame bearish trend, you want to buy the discount portion of the range. So now let us pretend that these two candles here, 1, 2, they haven't happened yet, but this one just closed. So what is a very simple, already I've kind of given you a strategy that you can run away with, which is very simply this. Okay, I'm going to set an alert for when the market gets to just above that 50%. Once it gets there, I can immediately say I'm going to sell, have my stop loss here, and my take profit will be where? At the bottom. Because if you are selling and then you close a trade, okay, it's kind of like buying, and vice versa. You understand? So this is one way you could do it. Those of you who want to get more granular, once we've marked out this high and this low, I can very simply say now I will go to a regular time frame chart. By the way, for those of you wondering where you can find the range bar chart, you just need to get CTrader. It's free. I'm not introducing you to anyone. I don't have any broker to introduce you to. I don't care for that shit. It's free. So one of the other things that you could do is once you've set your alert and the market hits it where? At this point here, right? You can then start looking for reasons to go short. For those of you who are familiar with ICT concepts like the fair value gap and all, and relative equal highs, which you can see here happen to line up with that 50%, and it gets taken out. If we go down to the 1 minute, I'm sure we'll see the whole thing with the break in market structure, fair value gap formation, and then you take that and exit here. For those of you who are not familiar, I will very quickly return to what I was teaching so that you can understand it as well, so you don't feel excluded. So when we talk about liquidity or money, the money we're looking for, remember these 3 important questions, we are going to look at 2 distinct types, right? It's just very simple. There's money outside the range. Let me just put this: types of liquidity, okay? 1, money outside the range. 2, money inside the range. Okay? When it comes to the money that is outside of the range, it's just a simple thing. We're talking about the highs and lows. Highs and lows. That's all. Nothing fancy. So remember, let's come back to this wick, this candle again that we highlighted. That means there's money sitting atop here and there's money sitting below here. And I need you to know what I'm teaching, again, please, applies regardless of what you are trading. Price is price. Price does as price does. There is no difference. Now, when it comes to money inside the range, there are so many different ways to look at this, but I have learned that it is important to keep shit simple. Excuse me one moment. There's a trade I'm waiting for, so I just want to see if I want to take it now or I want to wait. No, we're hyperextended. Okay. So back to it. Now, money inside the range, there's all kinds of ways to define that, but we're just going to keep it simple and say you have your order blocks and fair value gaps, right? Why am I only looking at these 2? Why am I not talking about breaker blocks and inverted FVGs and blah, 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 blah? Because again, if you carry too much information in your head, you just give your mind more things to spin around with. Now you're seeing 50 different reasons to buy, but you're also seeing 65 reasons to sell, and you're confused and you're guessing. I'm trying to keep you from guessing. Have I said to you at any point during this live that I'm guaranteeing you wins? I'm not. I'm guaranteeing you, though, that there is a way for you to kill your ego and to accept that, oh, this might be a losing trade, instead of you using hope and vibes and prayers and inshallah to say, okay, maybe we're going to be saved. I've been there. I'm not judging you. I'm not judging you, I promise. So I'm trying to keep you from that. Now, we've said there's 2 kinds. We've talked about the external liquidity is easy. This is the whole idea. If you are trading from external liquidity to internal liquidity. So there's 2 kinds of trades you can take. Ideally, pick one. If you pick one, what happens is you won't trade as often as you used to, but you will win more often and you will keep your money more often. So there's two kinds of traders you could be. You could be both if you feel like you're an idon, you're a big pin, you can do this, no problem. I would rather you pick one. Two kinds of traders. Okay, you could be number one, an external to internal liquidity trader. Mind you, I apologize, I don't look at comments while I'm teaching because I don't want to be distracted. You can also be an internal to external liquidity trader. Okay? When you pick either one of these, again, the number of trades that you take will go significantly lower, but you will be right more often than not. 2, when you are wrong, you know to get the fuck out, which is important because trading is not just about tell me where to get into the trade, I beg. Tell me where to take my profits, and that's all you want to know. No. There's a lot here. So what I'm teaching you is stuff that's going to help your psychology. Okay? So let's move back to this matter here, this money inside the range, the different types, which you've said order blocks and fair value gaps. And for that, I'm going to return to that. I think it was a 1 hour chart. Let's see if it was. Okay. So remember this whole highlighted thing here, this whole highlighted rectangle is that one single. I'm going to delete this now because by now you should know what I mean by premium and discount, please. It's getting in the way. This whole square is that one single block that I highlighted. Okay, so let's take a look at it. Doesn't extend this far. Should be here because this is where we form that. So if I say to you, okay, we now have our high and our low, we defined that. That's a 50 pip range. We know that we want to be selling from the premium portion of the range. We know that the premium portion of the range starts from above 50% and extends all the way to the top. If I am an internal to external range liquidity trader, what I will be doing very simply is looking for the internal liquidities that I talked about. This is a 1 hour chart, so we can't really see much here. So what I'm going to do is drop a little bit lower. Let's try the 30-minute, and I'll zoom out again, coming to look at that same square. You get why? I'll show you. So I'm looking at this once more, and now I can see. Well, technically, I can see it in my mind, but I need for you to be able to see it as well. And for that reason, I will drop slightly lower still. All right, here we are. What is an order block? Again, it is a form of internal range liquidity. Think about the meanings of the words. Internal, meaning inside. Inside of what? The range. What is liquidity? It's simply money. That's all it is. So, order block, money within the range. Now, how do you identify an order block? Very simple. Look at this high here. Excuse me. Look at this high here. It got broken by this bar. Once this breaks and closes above a most recent swing high, mind you, a swing high is a 3-pattern formation. Keep that in mind. So this is a swing high. It's a 3-pattern formation, 3 candles. In other words, the middle candle will have the highest high of all the 3 candles. For a swing low, it's the other way around. So look at this here. This middle candle has the lowest low. A swing is quite literally the turning point in price. Listen to the words I'm saying. Turning point, as in it gets to this point and then it decides, you know what, I'm going to turn around. That is what you want to take advantage of. It's because of these swings also that you're able to map out your areas of liquidity. So I showed you by simply taking one bar and marking the high and the low, you can mark a range. You can mark out your range, but you can also go from swing to swing. All right, I'll show you about that in a bit, but let's focus here. So now I've come from that 50 pip range bar chart. I'm now looking at a 20-minute chart. We broke above here. Once this break happens, this is actually a swing, the most recent swing high. Once this break happens, the last bearish candle becomes an order block. This last bearish candle here before the break of this swing. Likewise, in the other direction, we have a swing here, 1, 2, 3. That's the swing low. This candle breaks that. Once that break occurs, this last bullish candle here becomes your order block. This is a bearish order block. So what does this mean? The big boys and big girls in the markets, the people with the actual funds that make the markets for you and I small fry to come play, they're not going to put all of their orders in at once, because if they do that, it's going to shoot all the way down, and then all of us will join them and we'll make money, and then the world will be too happy for the powers that be. We can't have that shit. So what do we do instead? Here's an order block. What's going to happen is they'll push past it. Sometimes immediately they'll come back and tap into it as they did here before they continue. Or they'll come back at a later point, which is what they did here. So notice this line. Remember that this line is basically our halfway point, our equilibrium, right? Notice that later on, this is what they did. They came and tapped right into that order block here. So let me zoom out a bit. In other words, a very simple way to trade then could be, okay, I'm going to place a pending sell here, and I'm going to have my stop loss just above this order block, which is about 12 pips. And then I'll be looking to take profits down here. Now, disclaimer, this is not how I trade. I do not trade with a positive risk-reward ratio. I use a negative risk-reward ratio. Yes, I can hear everybody and their ancestors screaming at me, but it works for me. Sorry, not sorry. I've done some incredible crazy shit with it, and I will continue to trade that way. We may talk about that later, right? So I have shown you one specific kind of internal range liquidity. The second kind is a fair value gap, which is right here. So I crave your indulgence, please. I'm going to go ahead and make this, let's see. I'll just leave it as it is. Pay close attention. So for the fair value gap, what you want to see, you have a low. This is for a bearish fair value gap. That gets broken. Okay. So once this break occurs, then you have this bar that pushes down, the next bar pushes down. What you're noticing is from this point here all the way down into this point here. Notice the candles my cursor's on right now, here and here. Notice that from the low of this to the high of this third candle. So this is candle 1, candle 2, candle 3. I have an ebook. I'll put it out for free so you guys can get it. If you feel like you're not understanding anything, I'll put it out for free. The only thing I'll take from you, if anything, is your email. That's all. So I can keep you up to date. But here, you have this candle 1, 2, 3. Below, down to this high. All you had here was just pure selling. This is an imbalance or a fair value gap. Why is it called a fair value gap? Because again, the market needs to go back up, because all we had here was just selling, 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 no buying. The market needs to go back up to offer a chance to the buyers to do their thing. So what happens? The market trades back into it and then pushes down. So this is another way that you could trade. You could choose to say, okay, I'm going to have a pending order just above where that fair value gap starts, which is just above the high of this third candle. And then I'm going to have my stop loss either above the second candle or above the first if you want to be even safer. And then you can look to take your profits. Remember that this white box you're looking at is not from nowhere. It's from that single range bar. So then you look to take your profits where? At the close of that range. Why? You could take your profits there, or you could take your profits at the next 50 pips. Why is that? Let me go back here so you understand what I'm saying. I'm going back to our range bar charts. It needs time to populate. Okay, so here we are. This is why I love a range bar chart as well, and you may too. So this bar has closed and everything we've been analyzing is happening within this one that has opened. Notice that it opened here and pushed all the way to the top. If I come in here, and this is how I personally trade now, if I come in here at a time when the market has pushed above that 50%, I don't overdo it by going granular. The option that I've shown you with the internal range liquidity is for those of you who like to have your tight stop losses and you like to have your positive risk reward ratio. That's fine. There is no right or wrong way to trade, just like there is no right or wrong way to live life. They're just people who are living and traders who are trading. Do with that information what you will. Personally, if I come here, I just know, okay, whatever I'm doing, my stop loss is going to be above here, which at this point, let's say this point where I put my cursor up there, that's about what, 24 pips. Okay, no problem. Now, Because I am anticipating that the next bar is going to be bearish, and because it's a range bar, by the time the market starts to pull back down in my favor, all I have to do is measure from that top of this current bar that hasn't closed yet and push all the way down to 50. And that'll be where I'll take profit, not at the 50 pip mark directly, but just above it, because I don't want stories that touch. Okay, I'm not trying to cry about how the market almost touched my TP and boo-hoo. No. So this is why I love a range bar chart, because look at this current one that is forming now as an example. We opened here. It pushed all the way to this point here. We're down here. If I measure from this point here down to where I anticipate 50 should be, I now know where to put my take profit. Do you understand? It's not done closing. There is no guarantee that just because I'm using a range bar chart is going to give me all of that. But at least I know that, okay, I can take advantage of this. And I also know for certain that if the market starts to push from down here and goes all the way up into 50 pips, then I must be wrong about the trade and I should close it immediately. Right. But let's come back to what I was teaching you. I said there's two kinds of traders. I've shown you how to be an internal to external liquidity trader. So again, whether you're using a range bar chart or even a regular chart, let's look at this as an example. This is GBP CAD. This is a 6-hour chart. So let's take a look at this. Right click. I'm going to change that to a color that will let you see what we're talking about. This is GBP CAD. This is a 6-hour chart, which means each of these bars is showing you 6 hours of price action. What have I done? I have marked the high and low of this bar in particular. So now what am I going to do? Excuse me a second. Okay, so I marked the high and low, and now all I'm going to do is head over to the 30-minute. What are these time frames I'm choosing, by the way? They're personal preference, okay? If something doesn't work for you, if it's not clear to you, this is a rule of thumb. If something is not clear, like you don't know where the bias is, go higher. If you don't know where the entry should be, go lower. Okay? So keep that in mind. But now this is GBP CAD. This is that 6-hour bar that I've marked from high to low. Now all I'm doing is what? Asking myself, if this is our equilibrium or 50%, then stuff above it is the premium that I want to be selling from. So now I'm just asking myself, okay, that's for those people who like the positive risk reward ratios again, to be very clear. I'm looking at this now and I'm saying to myself, you know what? I want to know what's going to happen when the market gets, let's see, we had this. I want to know what the market does when it gets here. And I'll show you why I'm marking that one in particular, even if it doesn't look like your standard order block based on what I defined. Just give us a moment and you'll see it for yourself. I'm going to go even lower so you can see it. I've gotten very used to being able to see what the market is doing on lower time frames in my mind without needing to go down. But as you can see here, what do we have? This is a swing low. It got broken. What did I say the order block was? The last bullish candle before that break, right? So just take a few pips there to adjust. And what happened? The market tapped into it and pushed down. What did I say about your stop losses? Could be just above that high of the order block, or since in this case you have a swing formation, why not just have it above the swing? And then what's my take profit? Very simply, I will be targeting the low of that bar. If I don't want to target the entire low, then I'll just look for anything that may have formed in a lower time frame that would suggest to me that, okay, perhaps you want to get out before you get to the low. Or alternatively, I can just hold that trade. This is for those of you who like to ride trends. What are you noticing here? We have this high, we pushed down, we have this high again, we broke it. Not only did we break it, we pushed up, and what did we form in the process? Remember, 1, 2, 3. What is this? A fair value gap. By the way, anytime you see an order block, so this last bearish candle, After this break of this high, you have this last bearish candle, that's your order block. When you see an order block lined up with a fair value gap, it further validates that order block. It tells you it's a very high probability order block. And as you can see what happened, the market tapped into it. Because this is GBP CAD, it's a very volatile pair. I'm never interested in having tight stop losses. I'm not. Because I know how wildly it swings. So in this case, you see we tapped into it. We wicked through. So if you had your stop loss at the low, that would be fine. We wicked through and then we rode back up. Are you understanding this? Again, it's the same principles. I'll take you back to the 6-hour chart once more. I showed you how to do this with a regular bar chart. I'm showing you how to do this with I showed you how to do this with a range bar chart. Now I'm showing you with a regular Japanese candlestick. Okay, same deal. If I come over here like this, it's the same thing. Let's get this out of the way. This is the high, this is the low of this bar. We closed up here. Great. If for any reason, and there's always reasons, let me tell you something, there's always a reason to take a buy or a sell. If you don't define yourself, you're going to find yourself looking for all sorts of reasons. You may be right, you may be wrong, but there's all kinds of reasons. Ultimately, that's why I'm showing you a strategy that will allow you, so even when you are wrong about it, you know how to cut your losses really quickly. So in other words, if I jump into this trade, now let's say I have this and then the market has retraced into the discount portion and I find a reason to be a buyer and the market goes up here, great. And then I decided, okay, let me hold further, but instead the market is coming back down and now it comes down and it approaches this low here. What do you think I'm going to do? I'm going to close. Why? Because my trade is no longer valid. It's no longer valid because the context of the trade, remember, I started this off is we need a range. I started this off with these 3 very important questions. Number 1, where is the money coming from? Where is the money going to? The important thing is this. If I know where the money is coming from, I don't expect the market to retrace beyond that point. If it retraces beyond that point, I am wrong. Let me type that out so you don't forget, for those of you taking screenshots or anything. So this is the point. If the market trade price retraces back to and beyond where I'm coming from, the money is coming from, I'm wrong. Then I'll close. This is especially if you are an internal to external liquidity range trader. So especially if trading from internal to external liquidity. Okay? Now, where's the market going to? This is because, hold on. This is to know where my exit is. You see this thing? I don't know how many of you have been in this position. You get into a trade, it's wonderful, everything's working out fine, and you decide to ride it, but then the market's like, I'm not trying to be ridden today. So it goes back up and it smacks you out of the trade, and you start thinking to yourself, oh shit, I should have kept something to myself. I should have kept something. I could have, shoulda, woulda, coulda. Yeah. This is why you need to know where the money is going to. So me personally, I don't give 2 shits. You saw me take a trade now. I don't care if the market, I only ask for 6 pips per trade. I rarely ask for more. I don't care if the market goes 600 pips in my favor. Oh, well, I should have held that. No, I don't care. Because again, I told you we would float between mindsets and strategy and spirit. I don't care because I have noticed that it is easier for the market to hit 6 pips than 60. I have noticed that when I have a stop loss that is too tight, it is all too fucking easy for me to get stopped out. So what do? The logical thing. I go for low-hanging fruit. Oh, but what happens when you're using a negative risk-reward ratio? So what happens when you lose? See, that's the thing that people are not considering is, now that I've given you this edge, where's the money coming from? Where's the money going to? And I'll explain the reason for this 3rd question. Now that I've given you this, what it does is it makes it impossible for you to lose all the way. So I'll give you some quick math, right? This is what people typically say. Oh, so you have a strategy that is 96% win rate, meaning out of 100 trades, you win 96, which is cool. But what happens when you run into those 4 losers? And let's say in this particular case, the negative risk reward ratio is 10 to 1, meaning for every $10, I'm only trying to make back 1. People say, okay, so that means when you lose, then you're going to lose a whole 10 and you have to go back. No, because now that I have a range defined, I don't need to lose a whole last 10. Because all that's going to happen is the market's going to pull back. Let me explain. So this is a 50 pip range bar chart. My stop loss will be anywhere from 100 pips to 50 to 100 pips. So the market's going against me by up to, let's say I have that 100 pip stop loss in place and I jumped in here. Now the market is pulled back all the way up here. And let's say at this point it's formed a bullish range bar chart, or let's say it pulled back up here. And I said to myself, nah, this is my box. And I jumped in somewhere here. I'm not losing the whole thing. I'm only losing a little bit. And then my high win rate steps in and saves the day again. Where you will get your ass handed to you is if you feel that just using a negative risk reward ratio is enough. No, it's not enough. You need an edge. And what I'm giving you right now is an edge. That's what I'm giving you. So even if I jumped in here, and I say my stop loss, so this bar closed, and then I jumped in at the very open, the next bar, and I say my stop loss is 100 pips, and then the market pulls against me by 50. I'm closing that shit. And because I have a high win rate, I can find another setup and I'll make back that shit. It's easy. You guys have no idea, especially when it comes to very volatile pairs. That's why I love my GBP XXX pairs. GBP CAD is my baby. I also love GBP AUD. I specifically love Euro CAD and Euro Aussie as well. Sometimes I will touch GBP NZD and Euro NZD. Those can be really, really good as well. So just something to keep in mind. I have addressed people who are internal to external liquidity traders. So now let's talk about those who will be trading from external liquidity to internal liquidity. Your job is simple. Your job is, so you're going to be doing what they call the turtle soup trade, which is basically if you're trying to be a seller, you have a high, you have a low, your alerts will be at the high. And you're not going to be interested unless and until the market hits that high. So let's give you an example here now. The market has been ranging back and forth here, as you can see. Let's take a look at this critically, right? So this one forms. At this point, you have no idea that there's about to be ranging. You don't know. Then this one forms here. In your mind, because we've pushed 1, 2, 3, which is about measuring from this point to this point here, 111 pips is nothing to sneeze at, right? You may not think to yourself, oh, maybe this is actually going to be a reversal, this one bar here. You could just look at it as, okay, maybe it's just a retracement. All right. So then the market pushes up. It is by this bar, when it pushes down, that it occurs to you, oh shit, I feel like we're in a range. This is definitely a range. So what do we have here? This is the lowest point of that range. This is the highest point of that range. Again, it is by this candle that you become aware. So now we can start to treat this with the same concept of, okay, if it's a range, remember a range is just a block of prices, a series of prices from the high and the low. By the time this bar forms here, now all I'm doing, and I need to drag this in so there's not too much confusion when we drop to a lower regular time frame, because this is our, again, once more, this is a range 50 bar chart, meaning each of these bars are worth 50 pips. It's based on price, not time. So by the time this happens here, I'm now thinking to myself, we had this choppy price action. Maybe the market will want to go up. There's only one way for me to find out. I'm going to now go to a lower time frame. So I'll start from the 1 hour and then see what it's like. Let's zoom out a little bit. This is the area in question. This is the high, this is the low. So now all I'm asking myself at this point is I need information. I need to know, I need to see the market give me any sign at all that it's ready to turn around. What would be my sign number one? Sign number one is I need to see a break of market structure. What is this? A swing high, 1, 2, 3. So I'm looking at this swing formation. Excuse me while I widen that for you. Remember what I said a swing is? A turning point in price. And if you think about a swing also, what I'm saying is going to help you. A swing is literally the head and shoulders pattern on a lower time frame than wherever you found the swing on. I'm not just saying it, you can visualize it right now. Look here. You have this higher high here, and then this high here is higher than the other two on either side. It's the most recent swing high. It got broken by this guy. This break right here is sign number 1. Okay, maybe we're about to turn around. I say maybe because nothing is 100% in trading, and anyone who's telling you that is a liar, and they're going to scam you. Wait for it. Just wait. I promise you. So this gets broken, sign number 1. In the process of the break, what do we have left behind here? This last bearish candle, which is now what? Our bullish order block. So if the market were to have dipped down into here, this would be another opportunity for you. Number 3 is what? This bar closed here. In the process, leaving behind what? This fair value gap from this high here to this low here. You notice there was only buying. It needs to offer fair value. The market needs to offer fair value for sellers. So what's it going to do? Eventually, it will tap into it. Sometimes it'll clean up the whole thing. I personally don't like it when I see the price close into a fair value gap because I feel like that's not going to hold, just in my experience. But if I see it wick through, I'm happy with that. So what happens here? The market came and tapped into the gap. It came into it again, but it didn't close into it. It rejected it firmly. So what could we have done once this fair value gap formed? I'm just going to have a pending buy here. Where's my take profit? So now this is now technically where is the money coming from? It's coming from this fair value gap. Where is the money going to? Question number 2. I'm taking it to this high. Why? Because that's the top of the range that I identified. I don't know for certain that that range is going to break, so I'm not going to be looking for, let's see, is this up to 50 pips? Is not. I'm not going to be looking for 50 pips in this particular case, even if it would have played out in my favor later on. But I couldn't possibly have known that because, again, the context for the trade was the range I identified, which was now not just a single bar, but multiple bars. Remember, from that range 50 bar chart. So we tapped into this here. Once that tap occurs, we're now in the trade. My stop loss is going to be where? Either this second candle of the fair value gap, which is the one that has the buying pressure itself, or because I have learned, honestly, give room, give people room, give things room. My stop loss would just be here. And then what? I'm looking to target this point. And then if you are me, and you know that you only look for 6 pips at a time, one of 2 things will happen. I'll either take my 6, or I'll just keep taking buys and taking 6s. Until I get here or close to here and it's not up to 6, then I'm done. And I really, truly, sincerely don't care. So my trade is done here. I don't care. I only took 6 pips. I don't care. I'm not looking for more than that. Imagine being able to do this consistently every day. You let time work in your favor. Let time work in your favor. Time is another thing that you need to factor in. You don't need to make 50 million now. If you just keep doing this consistently, day after day after day, what you will find is, at a certain point, you no longer have just $100 in your account. Now you have 1,000. So if you were only gunning for, what, in my case, anywhere from 0.1 to 0.5% per trade, if you're just gunning for that, let me rephrase. 1% of 100 is what? 1. 1% of 1,000 is what? 10. 1% of 10,000 is what? You start to see it. And then if you're able to stack these consistently, again, you have the option. You could just take 6, or you could keep taking 6s. Let's see, from here to here is how many pips? About 30. Let's just call it 30. It's saying 32, but let's say 30. That's about 5 6s. But let's say I only took 4. You do the math. And then this is what gives you the confidence. I'm not trying to predict, 50 years from now, what's the price going to be with Bitcoin? See, there's some beginner type shit that I see sometimes, or people will ask me sometimes, I'm like, life hasn't done you anything yet, honestly. You think that the mark of good trading is being able to predict exactly where the price goes. And I'm telling you, the mark of good trading is being able to deal with uncertainty in price. There's only one thing that can be certain when you're trading, and that is yourself, your personal conditions. That's why you have to define things. You have to decide things. All these things I'm showing you are based on things that I have personally observed. Again, I say, I've been at this 11 years. I did not become successful until year 10. Literally last year, heading into this year. That's when I started teaching. I paused for a bit, but here I am now. So recapping, where's the money coming from? Because if the market trades or retraces back to and beyond, if you are an internal range to external liquidity trader, give me a minute, please. TikTok needs to confirm that I'm actually present. So give me a second. Let me just slide that and let's wrap that shit up. Okay, so we don't go. So I said, where's the money coming from? Because if the market or the trade or the price retraces back to and beyond where it's coming from, then I'm wrong and then I'll close, especially if I'm trading from internal to external range liquidity, which I showed you, right? Number two, where's the money going to? This is to know where my exit is. So I don't hold on out of hope, only to leave money on the table. And then this is number three. Is there enough room between these two places to take some for myself? Let me explain that to you. The reason for this third question. If I am basing my trade, let me get rid of this line here. If I am basing my trade on, let's say now I have my 1, 2, 3 swing formation. 1, 2, 3. And I'm thinking, perhaps we want to go down. And then I've marked out this high and this low. Not only have I marked out the high and the low, I have seen that the price has opened, it has pushed down, and now it's pushed all the way down and it's close to creating another 50 pip move. Like this is where the price is right now. So pretend this one hasn't happened. Let's say the price is right here. You know what I'm not going to do? It's 3 pips away from that 50 pip range bar being formed. You know what I'm not going to do? I'm not going to take a trade. But you could, and no, I'm not going to do it. I'm not going to do it. I need to know that there's more than enough space. I need to know there's more than enough room. If we have this here, the market has retraced and I know I'm looking to take my profits either at the close of this previous bar or I'm waiting for this one to create another 50 pip range bar and I come here. Of course, there's more than enough room and I'm a scalper at heart. But it doesn't matter whether you're a scalper or whether you're a day trader or you're a position trader, the same principles apply. There are higher range bar charts than this. I just prefer to use a 50 because I find that that's smooth enough for me to interpret what's going on in the charts. Okay, so you need to know that there's enough room because it'll be very silly if you, for instance, let's go down to maybe a 5-minute chart. Let's go to a 5-minute chart. It will be very silly of you to look at this setup now. Trying to find, okay, good. Let's look at this. So we have this low here. We broke it. In the process of breaking it, we left behind a fair value gap of sorts. And then we also have this order block here. So I'll just go ahead and mark out the order block for you so to see what the fuck I'm talking about. Where's my rectangle? There we go. Changing the color. All right. So it'll be very silly if I come to the 5-minute chart. I see this setup. And based on vibes and hopes, and inshallah, I don't know what we're even basing this on, to be honest. I see that we've broken and then we've retraced and tapped into this order block here. Let's say I have my pending sell here, my stop loss above the high as you've been taught to do. It'll be very silly of me to start expecting that this setup should give me 100 pips. Based on what? It's just the 5-minute chart. There's not a lot of movement in the 5-minute chart. This is just a blip. Don't get me wrong. It's not like you can't do magic with a 5-minute chart. You can. But I'm saying that you must be reasonable about what to expect. In this particular case, what happened? When the market broke this low here, this area, this order block officially became our where the money's coming from. Okay? When it came here, created this low, then officially gave you this swing, which tapped into this order block here. That gave you your full-on range, which is this here. This low here becomes where the market's going to. So that means What I should be targeting ideally is this low. And if I think that for any reason it's going to go even lower than that, then you know what I'm going to do? At least move my stop loss to break even or take something off the table so that if the market starts to come back again, I can be like, nah, I'm closing that. I don't have to lose it. I don't have to give away my money. But if you're looking at a higher time frame, and this is something that is key, if you've been failing for a long time and you're tired, I'm begging you, I'm asking, I would go on my knees if I could. Look at high time frames, I beg you, or high range frames. Okay, so I've taught you about range bar charts. Again, if you want to use range bar charts, just go get on the Play Store. You should be able to find CTrader. All right. I'm not selling you anything. I don't have any business selling you shit. Hold on a second. I'm trying to type it for you. If you want to use range bar charts, you can check it out on your Play Store or Apple App Store, whatever it's called. CTrader, that's how you spell it. Brokers that I know will offer you CTrader as well. IC Markets, Fusion Markets, Deriv as well. So I don't know. Personally, I use IC and I use Fusion because I love their spreads. Beautiful spreads that allow me to scalp. I also use Just Markets, but Just Markets does not offer CTrader. So I'm specifically talking about brokers that offer CTrader. So on there, all you need to do is just click on the time thing and you'll find the option for range. You even have Heikin Ashi, whatever you want. Okay? So that should keep shit simple. I've answered the third question here, which is basically, is there enough room between these two places as in where the money's coming from and where it's going to for you to take some for yourself? Okay? So again, you can define a range as a series of prices from high to low. You can pick one single bar and that'll be your range. Okay? Just one bar. You could do that as your whole entire strategy and just say, okay, I'm looking for a high. This is H6, by the way. I would never do this with a normal chart, but if I'm going to, it has to be a high time frame one. So for me, it's not I'm no longer satisfied with the 4 hour. I like H6 and above. I love H6. I love D3, but also bear in mind that I trade pairs that are more volatile than your majors. So EuroCAD, Euro Aussie, Pound CAD, Pound Aussie, Pound Yen, Pound Kiwi, and Euro Kiwi as well. So this is it. Here you have this, and all you're looking for is, okay, if I'm going to be a seller, I want to sell above that premium. And remember, whatever you do, to look at the general context of the price. Okay? You see the way we've been pushing down aggressively? Buying is not going to be on my list of options unless I see a very powerful reason to, like this here. This particular bar on a regular time frame chart, this one, especially in this context of a 1, 2, 3 swing formation. What did I say about swings? A swing is a turning point in price. So it gets to this point here and literally turns around. This is also a head and shoulders formation. If you go to a lower time frame, you'll see it shoulder, head, shoulder, inverted. This very strong close here tells me already that we're very likely going to push up a little bit. And remember, I'm not greedy. I just want 6 pips. So tell me you think I'm not going to make something out of it. This is why I love this pair as well, the volatile pairs, because once you treat them with respect and you analyze them correctly, there's no way you're not going to get 6 pips is stupid easy. It's not something to brag about. It's not screenshot worthy, especially in light of the fact that not only am I asking for 6 pips, I'm not even saying, oh, it's a 3 pip stop loss to 6 pips. No, I'm literally saying I'm having a wide stop loss, a stupid wide stop loss. It's not Instagram worthy, but you know what it is? It's stable. It lets me pay my bills. It's letting me pay off my rent. It's letting me pay off my loans. Do you understand? It's comfortable. I'm not here to sell you Lambo lifestyle. I'm sorry. If you want something that's sustainable, this is it. It does not need to be difficult. So I'm going to take a look at the comments now. How do you learn this? If you mean starting from the top, you want to learn, go to, those of you who need the CTrader, these are the brokers. I'm about to delete them now because I need this. You want to learn Forex, you go to babypips.com. My advice to you is to study about price and the technicals. I do not trade with indicators. If you want to study the section on indicators, that's up to you. The reason I do not trade indicators is because ultimately indicators are lagging. They lag behind what? The price. Price is the ultimate leading indicator. I don't need anything else besides what I have shown you, which is the concept of a range. There are some of you who do candle range theory, which is fine. You've picked a specific time that you expect things to work out, sure. I get that. My personal take on a range is it works, period. It's not about the specific time. It's a range. It's the concept of buying at the highs and selling at the lows and not being a greedy pig in the process. So go to babypips.com. You can also go to learntotradethemarkets.com. I think that's by now fuller, I don't remember, but one thing I love about this second site is that it seems to focus more on price. Again, I'm not a fan of indicators, so I don't do that. If you want to learn indicators and all, you're more than welcome. Hey, Yellow Elephant, how you doing? Now, this particular strategy, I'm going to upload the video to YouTube so that you can watch it again. And then I will be back live tomorrow. I haven't determined what time it is yet, but I don't even know what time I started this. It was just on a whim, but we'll see how it goes. Hi Signal Volt. Hi Very. Thank you for the follows, guys. I appreciate you. Thank you, Naf. I appreciate you. Okay. Just join the class. You need more teachings. Emmanuel, if you're still here, I will upload it to YouTube so that you can watch. And guys, like, there's going to be this temptation to skip the thing I was saying about decisions. I advise you not to. How do I identify the range? So let me ask you guys this question. Those of you who are still here, I have a question for you. Remember that I started this off, if you've been here from the jump, I started this off with a very simple explanation. And it's going to sound arrogant to those who don't get it. I don't care. You saw me take a trade on here live. I didn't even bother with a stop loss. It's not arrogance. It's this. I'm going to tell you exactly what it is. I decided that I am a good trader. I decided that I'm a winning trader. That is who I am. I identify as a winner. And it is only after I made that identification, and again, I told you guys that I have been losing for 10 years. It was in year 10 that I finally got success, last year. I had been losing for 10 years straight. It was not until I decided, you know what, I am a winner, that all of the things that I needed to know and to do started to come together. This version of me and the past version of me who used to blow accounts left, right, and center, they can't relate. They can't relate to each other. The past version of me would be like, you are very stupid for this negative risk-reward ratio thing that you just said. And not only that, you are a bomb bastard, because what the hell do you mean you're going in for just 6 pips per trade? Oh, and not only that, like, there must be something seriously that you're just not okay. What is this? What is all this talk? That version of me and this version cannot relate. It was when I decided to identify as that I was able to start putting the pieces together. And it happened so quickly. So quickly. I need you to know it happened so quickly. So my question to you is this: if you are this is the thought process that came to me. Okay? I'll show you right now. Look at this. Okay, let's get that out the way. And then look at this. Oops. Just need this one here. And then what I'm going to do, give me a sec, change this. So I have a question for you guys. Do I need a pencil? Probably not. Let's just run it. Please pardon these wicks, guys. You'll be okay. I'm not an artist. Very beautiful wicks. Okay. And then just pretend these are green for me. I don't have the energy to start changing this shit. If you only ever look for this, 1, 2, 3, 1, 2, 3, on a high time frame, I've told you what I personally consider as a high time frame. It may be different for you. So like if you're trading something that's not as crazy, like maybe Aussie CAD or I don't know, Aussie something, Kiwi CAD, Kiwi Aussie, that maybe Aussie Kiwi rather. There's not a lot of movement. There's not as much movement as a EuroCAD and so on and so forth. So a high time frame there would be different. In other words, since there's not a lot of movement, maybe you'd be okay with a 4-hour chart. Personally, I don't trade those. I trade volatile things and I love the 6-hour for time. When it comes to just pure price, I like the 50 pip range bar chart. So if I tell you that all you need to do is just look for 1, 2, 3. Look for 1, 2, 3. Look for the market to be willing to retrace into this. So when this is formed, you're looking for the market to be willing to retrace into it, and then you just prepare yourself to take off from here. Do you understand? Or if I say to you that just 1, 2, 3, mark off this high and this low, and then wait for the market to come back into this low, then you start looking for your fair value gaps or whatever FEG order blocks on your maybe 15-minute time frame, 30-minute, I don't know, before you take a trade. And that's going to be enough. Would you take it? If you are saying to yourself that you would much rather be able to be in the market all the time, all day, every day, I'm going to flip this back to my face now. Hold on a second, because I need to engage with. I don't know who it is, but I need you to see me. If that's all you needed to do, would you do it? If you're saying no, but you need to be in the market all the time, you need to always be in the market all the time. No, please. That is how you feel. You don't need to. You are not less of a trader for not having traded for a month, 2 months, 3 months. That's the kind of mindset shift you need to have. You are in a profession that makes it possible for you to make some people's full year in a day. You don't need to always be in the markets. This is how you keep your money. I'm asking you this question. Can you develop that sense of winning to the point where it is that you've told yourself, even if I'm looking at this chart right now, the fact that I feel some type of way about it, the fact that I'm feeling a question mark means I'm not going to touch that shit. Can you do that? Can you walk away? Can you know that even if you don't take a trade from now until April next year, that doesn't mean you're not a trader? It's not the same thing. It's not the same thing as needing to be at your desk at a 9 to 5. Oh, that's the only time that the people are going to know that I am. And that's really actually how life works. You have to be it here first. Once you are it doesn't matter if you're not doing the thing in the moment. You still are the thing. You are the trader. You don't need to always be in the charts. You don't need to. You don't need to. And I know that this, again, I've said my 6 pips, it sounds very stupid. It sounds very ridiculous. Y'all don't even want to know. There have been times where I was actually just gunning for 1 pip, which is more than enough to just cover my commissions and then a little something on top. It works still. I just decided I would up it to 6 pips. I know it sounds ridiculous, but do you know what it is? It's consistent. You don't need to have a bajillion pips. You just need a slight edge and good leverage. And this is the key part, consistency. Now, back in the day, when people used to say trading is boring, I used to look at them like, are you mad? What's wrong with you? How can you say that? That's mental. What do you mean trading is boring? What do you mean successful trading is boring? I get it now. It's boring. That's why I'm here teaching. Because I enjoy teaching generally. It's not just about trading life, metaphysical type shit. That's me. But it's boring. Because I can do it. I can do it. Like there's a level of proficiency that's just what it is. It's not arrogance when I say to you, I am luck. I'm not trying to say, oh, whoa, look at me. I don't lose anything. No. I'm saying even when it looks like I'm about to lose, because I am luck, because I have that locked as an identity. Luck is not chance. It's not outside of you. I'm not special. I'm telling you, you can do this shit too. Because I have chosen to identify as luck even when I'm wrong about a trade, guess what? I do exactly what it is I need to do to not give away everything and to claw my way back out of it with ease, just like that. And I'm saying you can do that shit too. It's not outside of you. It's not far away. Don't look at anybody as better than you. Stop that shit. You are on this path because you are a trader. You are a winning trader. That is who you are. What you are doing right now, you're moving through time, and time has you convinced that you're not yet. Stop waiting for the outside world to tell you who you are. And that was part of the mistake I was making. I was waiting for the profits to show on my screen first before I accept it. And that's life. It's not just about trading, it's everything. You have to first accept. I know it sounds so fucking weird and backward from what we've been taught, but I'm telling you, gang, listen, whatever it is you want to do, and it's not just about trading, whether it's relating with people, whether it's some other profession, I don't know what it is. You want to start working out? Don't just say, oh, I'm going to start working out to become healthy. No, I became healthy, so I started working out. I recognized that I am healthy, so I started working out. Recognize, to know. Because you already know you cannot experience or perceive anything or have any desire that is not already a part of you, built into you by design, by the divine. It is a part of you. So when you get a desire, what you're actually doing is remembering who you are. And I know like this is not some type of shit you're trying to hear. You think it has nothing to do with trading. It does. It does. Start with the assumption that you are successful. Start with that assumption. Don't come as a learner. Come with the mindset of, oh, I'm about to remember something awesome about me. I know it sounds crazy, it sounds woo-woo, but that is actually how it works. Time is not linear. We experience it linearly, but it's not linear. Everything is already here and now. That's why you're able to pick up on that desire to be a trader. Who do you think is sending that to you? Your own self. Your own self. Your own successful self. And that's why I keep hammering. My thing when I teach, I need to lead you back to you. I don't want you to come and say, oh yeah, Ness taught me something and then it helped. Nothing to do with me. It's all you. All I could do is just keep dropping little tidbits here and there to help you. You don't always have to be in a trade. You do not need 50 million pips. If you want to, that's still fine. What I've taught you so far can also work if you're a more longer time frame trader who you actually like the process of waiting for a weekly bar to form. It's the same thing. It's the same thing. It just means you go to a higher time frame. You go to a higher range frame. It's the same thing. It really is the same. And you are also even in a better position because you have clarity. And that can, if you now pair that with not gunning for too much, not asking for 100 pips per trade, what do you think is going to happen? Consistently. You don't trade often, but when you do, you trade well. And because of that, you keep the money. Because some of you are very good at trading. You just don't keep it. And I'm not judging you. I've been there. When it suddenly clicked as part of my identity as a trader, as a winning trader, I do not need to be in the markets all the time. I don't care for it. It's been amazing. And you know what's happened? It sounds like magic, but sometimes I'll just be chilling. I'm doing something entirely random. It's a time when I wouldn't normally look at a chart or anything, and it'll drop in my spirit. EuroCAD now. Go look at it. And immediately I'm seeing exactly what I need, my 6 pips. It sounds crazy. I tell you, this world is not quite as fixed as you think it is. It all starts from within you. You are the center point. You are the only still point here. The markets will go up and down. You are the only still thing here. You are the determining factor. And so you have to decide who you are. And that will affect the way that you trade and the way you do other shit. You have to decide. It's crazy. Sometimes I will sleep and in my dream, I will be shown a chart, a specific chart. I'll wake up and I'll go look at it and it's the exact same thing that I saw. Nothing special. All of life is spiritual like that. There is nobody above you. Don't let anybody get into your head like that. You can do this shit too. So, there's one more thing I want to show you and then we'll call it a day. Let me flip it back to the... Now, remember that I showed you that you can take a single bar, mark the high and the low, and then call that your range. Another thing that you could do to define your range is you could just look for a swing high and a swing low, or swing low and a swing high, whichever comes first. You mark that. Now you have a full range from here to here. Let me show you. Let's look at this. And let me take us to 50 pip range bar chart. Hold on a second so it can populate. Right. This is an example. What do we have here? 1, 2, 3 bullish swing formation. All right. That's where the money's coming from. 1, 2, 3 bearish swing formation. Okay, let me grab my rectangle. Again, pay attention. 1, 2, 3, and then 1, 2, 3. So this bar, this white bar where my cursor is, hasn't formed yet. But now I have what? A range. Where am I within this range? The discount portion. Simple life. Okay, let's see. Where am I here? This is, okay, 30. Let's just call it 30 pips, right? And let's say I've decided to risk a specific percent of my account. So it's 30 pips. I'm going to go ahead and have a 60 pip stop loss. What am I gunning for? I'm taking my 6 pips. So let's see what happens. If I jump in here, I have a little bit of drawdown, 23, but it didn't break. And then eventually turns around, boom. And I just keep taking 6 and 6 and 6 and 6 until I get to what point here from here to here is about, based on this range. Let's just call it 88 pips. Would I have come here and then I had to deal with, a little bit of, oh my God, what's happening? If I'm at this point here, guess what I'm doing? I'm also adjusting my stop loss, but I'm keeping what I've been risking the same. If I'm jumping in here. So it's a dynamic thing. Keep that in mind. I'm not saying now I'm going to just hold on to 60, 60, 60, 60. If I come in and I found, wait a damn minute. Now we're dealing with this drawdown here. There are so many ways. Even if I kept it 60, if I find that by the time I'm pulling into 30, there's multiple ways. I could close a thing, or I could just open up a sell trade instead. So that's hedged. Now I have multiple options. So once I hedge that or I close the trade, what I've done is I've opened up my mind. I've released mental and emotional capital. Instead of sitting here and being afraid, oh my God, what's going to happen? I'm not afraid. I don't give a shit because now I've stopped the bleed. Now all I have to do is either wait to see what plays out here, or I could just go to a different pair. I could just do that. Here's another way. 1, 2, 3. Swing high where the money's coming from. 1, 2, 3. Swing low. Okay, so we've marked this out. Remember, 1, 2, 3. So this bar hasn't formed yet. But if I have my stop loss here, and maybe you don't want to do like me, you don't want to be scalping all your way through, or you don't want to just, even if you don't want to just take 1 6 pip trade, guess what? Okay, fine. My stop is here 75 pips. My take profit is right at the top of this range or just before it. You get put in for almost 1-to-1. Life does not have to be complicated. And one of the things that I love about range bar charts, and I'll show you as well, is that I specifically love when I see two wicked bars close. Usually it means I might get more of a push in that direction, even if it's only a little. And you see, it's shit like this here that made me say, you know what, just give us 6 pips. Because occasionally you will lose. I'm not saying you won't lose. And this is another thing that I want to point out as well. I'm going to flip the camera right back. Important thing. They used to tell me when I first started out that you should not put your whole capital into your account. And I thought that was stupid. I get it now. If you have $1,000, you do not put the full 1,000 in there. You don't. It doesn't make sense. And I know that it sounds like, but then it's going to take a long time for you to grow it. I get that. If you trade like me, it does not take a long time. Let me explain. With certain accounts, not all, with certain accounts, I will have my entire account be the stop loss. In other words, I will have 100 pips. I will set a position size that I know if the market were to move against me 100 pips again, which remember, I don't let it because I have an edge that lets me know way before the 100 pips has hit, you're wrong. Hedge this or close it out. You're starting to understand how I think. So I will have that whole account as my stop loss. You from the outside looking in, watching me trade without a stop loss, will think I'm crazy. What you don't understand is I have a specific amount of capital. I'm not going to name how much, but I have that in reserve. So I'm not taking my whole money and putting it in there and saying, yeah, let's go. That's crazy. That's crazy. You know what this does for me psychologically? It frees my mind. It frees my mind to focus on winning, to focus on just taking the right trades. I have given you a stack of things, of reasons behind why I do what I do, how I do what I do. It will work for some of you. For some of you, it won't, because you have maybe a different set of psychological or spiritual challenges than I. My challenges back then, I was a very greedy motherfucker. Very greedy. I also was very impatient. Too impatient. And I tied my self-worth and my identity too closely to whether or not I was being a trader that pulls in blues instead of reds. When you allow the outside to define the inside, it messes you up. You can't. It starts from the inside out first. I know some of you are going to hear this and then you're going to try to apply it and then you're going to find out, oh, you lost trade, she's capping. No, I need you to dig your heels in and decide even that does not mean you're not a winner. For goodness sakes, successful traders lose too. We lose. A losing trade does not make you a losing trader. A blown account, let me bust your head, does not make you a losing trader. It is when you sit and accept defeat, now you've lost. A blown account, a losing trade is a teacher. Why did this trade not work out? How do you think I got here? Let me give you a bit of backstory. Sometime around year 8 or year 9 of my trading, I thought to myself, you know what? I need to have a 1 pip stop loss, because if I can have a 1 pip stop loss, that means, and I'm just gunning for about 20 pips, that's a 1 to 20 RR. So there's no way that I won't win. So I started doing that. And I was winning, but not quite. Because what would happen is, by the time I finally have that one winning trade that has wiped out all those losses, there's all of these losses that is now started looking like, ma'am, you might as well have gone for a 1-to-1. That's how I got here. From realizing, wait, this whole time, all of those losing trades that I had back to back, if I had just flipped it, those would have been winning trades. How did I learn that? From a losing trade. You have to first have the mindset of being a winner. Then even the stuff that doesn't work out in your favor or seems not to work out, you will stop treating as a death sentence and start treating as simple information. Information, data you can work with to adjust yourself. It's cybernetics here. You are watching the outcome of a thing and you're adjusting accordingly. It's like being on a ship. You're steering the rudder and you notice that you're a little bit off course. So what do? You course correct and you keep course correcting because the water will keep trying to buffer you into a different direction, but you course correct. And next thing you know, you've landed exactly where it is you want to go. But if you're at the rudder and then the ship has, you notice you moved a little bit, a few degrees off to the south. You're trying to actually go southeast or whatever. I don't know. I'm not a geographical person. And then you go, hey, well, of course. So I'm just going to take my hand off the rudder. I quit. That's not life. You will not get anywhere. You will not get anywhere. Anyway, that's all I have to say for now. So let me just quickly see if there's any other comments. How do you identify the range? Okay, I've answered that. Let me scroll down to... Thank you guys for the follows. I appreciate you. Thank you for your time. I appreciate you. Thank you for listening. Thank you for listening. It is, oh, and just to repeat myself, I don't typically read comments when I'm teaching because it's easy for me to get distracted. So thank you so much for listening. I will put the video on my YouTube, Abednego. Yes, my YouTube handle is the same as my TikTok. I take ticks. ITAKETICKS, ticks as in trading ticks. Thank you for the follows. Zaddy Prince, if one chart is moving, another one should, so I should trade, so you trade every day. Well, if one chart is not moving, I guess. If that works for you, that works for you, good. 90% will not stay. Puzu, hey, it's so good to see you. It's so good to see you. I always know what the market is doing, but I keep losing all the time. Non-swa. Have you looked into why? Have you looked into why that happens? If you know what the market is doing, but you keep losing all the time, one of, again, my issues, which I've pointed out here, is that I found that I was being too aggressive with where I was putting my stop loss and too ambitious with where I was putting my take profit. That's why I personally, I'm not saying this is a solution to your problem. It's a suggestion that you go back and look at your losing trades just to see if perhaps you had gunned for less and also given your trades more breathing room. See if that would have worked out in your favor. Because if you know what the market is doing, it sounds to me like that might be your problem. Hi, Christoph. Thank you. You mentioned an ebook. How do we get that? Oh, yeah. So I'm going to it'll be in the link in my bio. I don't know if my link tree is still there. I really don't remember because I haven't done a lot here. But if my link tree is not there, it'll be there before the end of today, latest tomorrow. So it'll be there. There'll be a link for you to go download it as well. What about spreads? Oh yeah, that's a very valid question. So that's why I trade with very specific brokers, and I use their raw spread option. So with IT Markets offers really, really impressive spreads. Also, Fusion Markets offers great spreads as well. I think they even have a zero spread account. Yeah, they should. So ideally, if you're going to trade the way that I trade, you obviously don't want, it doesn't make sense if you go take a trade with a pair that has, I don't know, a 4 pip spread and you're looking to take. That's not impossible. Because after all, I've done it with Euro USD, zero spread, and I was gunning for just one. I was paying commissions of about $7 or so about 3 on top of that. It's not impossible. It's just I decided to push it up a little bit higher. So you just need to make sure that you have a broker that offers you tight spreads. Those are the two that I've mentioned are part of the ones I use, including Just Markets. I only recently started using Fusion, so you don't start trading at 9:30 a.m. No, I'm not. How do I put it? What's the word? Tethered to my charts. I used to do that before. You are not defined by time either. My specific strategy, I prefer when there is a lot of movement. I don't need to wait for a specific time for that to happen. The reason I say this is because I have gone from doing that to checking myself. I don't check time. I'm like, how are we right now? You good? You remember who you are. You remember your luck. You remember you're a good trader. You remember you're very good at this shit. You remember you only take top tier trades. Remember you don't settle for less than what is absolutely clear and obvious. You remember, right? Okay. You feel that. You know that in your gut. Now let's go. If I don't feel that way because I'm a human being, all right? Human's gonna human. We have minds. They're not always going to be on track. We have bodies. I know that I don't perform well if I haven't slept properly. If I just got into an argument with my person or something like that, I don't. So I'm very mindful. I don't care about time anymore because in the past, what would happen is, okay, it's this time I show up. Oh, but I'm hungry, but I'm this, but I'm that. Okay, I don't care, but you're supposed to show up at this time. Then I start making stupid decisions. So it's not about time for me. The only way time plays a factor for me is that I need those quick moves. I'm not trying to be sitting for how many hours just to take 6 pips. Like, that doesn't make sense. I'm not trying to turn this into another 9 to 5. It's not a 9 to 5. It's supposed to be the thing, one of the tools, by the way. It's not what is freeing you. You're freeing yourself, but it's just a tool to help you set yourself free. So why would I take the same mindset from when I had to work? In fact, I had worse than a 9 to 5. I was always just bloody working at the time. Why would I take that and then apply it here? It doesn't make sense. Puzue, you're very welcome. That's my biggest problem. Non-SWA, check. I have a strong feeling. Check your. By the way, and while I'm telling you this, I know how hard it is to look at your losing trades. Oh my God, I was so. So much ego, man. So much ego. Because it's hard. You have to go back and look at the rubbish you did. But learn to separate yourself from that. You're just looking at it like a scientist, okay? You're not going back to look at losing trades to, oh, why did I do this? No, 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 don't beat yourself up. Just, it's data. If you are able to lose consistently, let me say this, you are already a winner. Because it is a skill to be able to lose consistently. All you now need to do is whatever you're doing, flip it around. Whatever it is you're doing, flip it around. Do you know how lucky it is to keep losing? I think one day I'm just going to do a live on luck because I feel like we've been so misled about so many things. I'm probably just going to do a live on luck. I hated hearing that because I was one of those people who, what do you mean I got lucky? I worked hard for this. I sweated. I suffered, because the mind needs to feel like, oh, I really struggled and I muscled my way through this and that's how I got here. I've grown humbler. Time has humbled me. Experience has humbled me. There is a place for luck. Achievements that you get easily are also still achievements. They're still valid. If you are able to lose consistently, you are a winner. Flip that thing upside down. Do you know how lucky that is? Back to back to back to back, you're losing. You must be doing something that could be the right thing if you just flip it upside down. Think about it. So you don't enter a trade at 9:30 a.m. David, I don't even know what 9:30 a.m. is for you. I'm in Nigeria, so I don't know. I don't know. If you're talking about 9:30 a.m. as in New York, what do you call this? New York time. I don't know. If you're talking about what ICT taught, as in wait for, which by my time actually, and that's even for indices, that would be around 2:30. So back then, what I would do is I would show up around 2:25, then take a look. If that's what you're talking about, I don't know, but again, I don't care. I check within myself, but I have a strong rule, which is once it is 4:30, I don't touch any trades, and it's nothing to do with anything. It's just me because I know how long I can focus for, and I'm not trying to do that. I don't take tricks. RCAF. Let me type it. My YouTube channel is the same thing as my TikTok channel. I take ticks. Can I pin that? Yeah. Okay. Who am I missing? What comment did I miss? I take tricks. Market will hit your stop loss and still move in your direction to full TP. Okay. So yeah, definitely go back and look at what you're doing. Your stop loss needs to be reevaluated. You can still make a killing even if you don't do the negative thing. You can still make a killing with 1-to-1 and 1-to-2. I know it doesn't sound sexy. I know, but I promise you it works. That's how I got here, because from the stupid thing with me having a 1 pip stop loss or even less sometimes, I went from that to saying, okay, fine, let's widen it. Let's look at this, because I remember seeing some trader going on about, no, you only need a 1-to-2. And I'm like, that doesn't make sense. And I tried that and I was like, okay, I'm winning a lot more now. How about a 1-to-1? And then I'm like, wait, how about the other way, 2-to-1? And that's how I found myself here. She's saying, turn your losing trades to become your metric data, analyze and inverse it. Thank you, sis. Clem Crypt. Thank you. You said it better. You said it better than I could. Thanks. Really have to try my strategy. It's not I don't want to claim it as my strategy. 1, 2, I don't even think about it as a strategy as much as just a way of viewing price, because with what I've shown you with the range now, I've shown you the range, how to define a range. I've shown you what the liquidity looks like, the order blocks and the fair value gaps. But the thing is now, even if you are an indicator trader, you use a MACD RSI, like what's this guy that I learned from the first time I ever started trying to trade, Bruce Webb. If you use a MACD and RSI crossing above or whatever, I don't remember. I don't use indicators. If that's what you're doing, now you're doing it with context. So if you're using a bullish MACD cross with the RSI going above 50 or whatever, because you're looking for that as your signal to buy, now you're not just looking at it anywhere it forms, you're looking at it somewhere it's more likely to work out. And then even if it doesn't work out, you know that, oh, you can close way before your stop gets hit. Hey, trader, nice. You made 15K today. Love it, love it, love it, love it. I am from Nigeria. Green, white, green. Explain a little bit more on range bars. Okay, so the range bar, let me show you. I don't want to just talk about this. Let me show you. So right now, you're looking at a range bar chart. I think there was some weird gap down here. Excuse me. I think I should go to the black one. Yeah, less of that flickering, annoying thing. So a range bar chart is a price-based chart. I'm going to type that out. Bold 20, boom. So a range bar chart is a price-based chart. You'll get this in my ebook. It will be available at a link in my bio. So follow me now if you're not following. I'll post something to let you know the ebook is up there. So follow me and put your notifications on. Okay? So range bar chart is a price-based chart. You can set it to X number of pips. No new bar will form unless and until that number of pips has been achieved from high to low, or high to low bearish, or low to high bullish. Yeah? So you can screenshot that if you need to, whatever you need. Now, what you're looking at, this is a 6-hour chart. Pay attention to all of this. I'm going to highlight all of this just for your convenience. Pay attention to all that price action, okay? Now, I'm going to switch to a 50 pip range bar chart. What does that mean? It means each of these bars are worth 50 pips. You need to give it a few. So this is all of that price action that looks so messy. Now look at how much cleaner it is and easier for me to interpret. Let's try a 100 pip range bar chart and see what that's like. That's crazy. All of that price action is within this single bar. See that? And oh, mind you, the same concepts apply when it comes to, you know, them fair value gaps and order blocks and all that shit. Because look at this. This low got broken by this bar. When this bar formed, it officially left behind what? A fair value gap, which we began to trade into. Now all you need to do is wait for, you can either decide, okay, you're going to hop in, have your stop here or your stop there, and then see how things play out. Or you could say to yourself, no, I'm going to jump down to a lower time frame. Let me get a vertical line so we know where we're going. I'm going to jump down to, since this is a 100 pip range bar chart and this is EuroCAD, let's see what the 4-hour looks like. Okay. So I'm going to jump down to a lower time frame and see what reasons, if any, I could use to be short. What's the first thing I observed here? We had this low, which was broken by this bar, and then we pushed even further down. So now we have this fair value gap up here, and then this other one down here. When I have two in a row like that, I'm typically more interested if it's for sells in the one above, if it's for buyers, the one below. In other words, for sells, the most premium one, for buyers, the most discounted one. In this case, we're trying to sell, so my interest would be, now I'm going to adjust that for here. And then all the way up into this here. And so now, all I would be looking for is reasons to be a seller. So if I had come in here and this touched, and then I find there's multiple reasons to get into a trade again, I have more flexibility because I'm not asking for too much. 1, 2, 3 swing formation on a 4-hour. And also, again, disclaimer, I do not use the 4-hour chart. I don't like it. I don't hate it, but I don't like it. I pushed up to 6. I'm looking for my 6 pips. What? Guess what? I'm going to have that. Okay, also in the context, let's move this to one side. Think about what I said. A swing is a turning point in price. What is this? 1, 2, 3 swing formation. Then we pushed into this fair value gap here. 1, 2, 3 swing formation. What is that? If it's a turning point, it's been created here, and I have this full close here. What does that tell you? I now have, see, you have ranges within ranges and swings within swings. I'm going to change this, make it easier to see. I now have a swing low here and a swing high. I've bracketed that off, and that's now my swing. Granted, we're already in the discount portion, but then I can tell myself, okay, I'm going to come and take profit here. That's why I say it's not a strategy. It's a way to think about price. It's a way to think about price, not a strategy. All right. Let me flip the camera and continue with your comments. Trader, oh, you're from the UK. You trade BTC. Let's trade together. I don't trade Bitcoin though. I don't trade Bitcoin. You're kind of profitable. I would say, I mean, you made 15K, so have fun. Text you can help. I'm going to tell everybody in here, I don't know whose intentions, who's like, be careful. Oh, also, I would never message you. Not because of anything, but just because for your safety. Because if I go around messaging people, then how do you know who's actually? Anthony Z, thank you for watching my live. Thank you. Oh, that's awesome. TikTok says you've been here for a bit. So I probably, okay, so that's about it then, I think. Can we take a live trade with you? Oh, I already took one. And yeah, perfect timing. I'm done for the day. No, I can't be done for the day. How am I feeling? I'm not done, but I'm not taking any right now. All right. So if that's about it, thank you guys very much for paying attention. Thank you for everything here. Please do not take anything that I'm saying as financial advice without going to test it out for yourself. I need you to have a healthy sense of skepticism and go and check things out. Anthony's a good. Oh my god, thank you. Naf, yes, you can do this on MT5. On MT5, I'm assuming you're asking me about range bar charts. For MT5, you will have to get some. Oof, I know there is one. I just don't remember the name now because. Wait, no. I'm not even thinking of MT5. I'm thinking of MT4. But there should be an MT5 version. Someone must have coded it somewhere where you can actually just attach an EA and it'll generate the charts for you. So you should be able to do that. And oh, by the way, I forgot to show you guys one more thing. Add a link tree. Yeah. I had a link tree there before. If it's not still there, I'll put it back. I think there was a time I was considering shutting down this account. I want to show you guys one more thing with Renko charts. Because it's the same principle. It's not different. It's not different. All right, let me show you. Flip it around. Flip. Hello. Thank you very much. So this is a Renko, which is the same principle as a range. This is a 20 pip Renko bar chart, which means that each of these bars will not close fully unless and until the market has moved 20 pips from here to here. Now, this is 25, sorry. So from here to here, 25 pips, here to here, 25 pips. Now, let me explain something to you. For those of you who are not veteran traders, don't really understand how Renkos work. So you see this bullish bar here that closed here. You're probably wondering, how in God's name did we open down here and all that? Let's mark it. And let's go down and see. So this is a 25 pip. Let me not forget. I think I'm going to set that so I don't forget. Where, Renko 25. Okay, cool. Now let me go down to maybe 30 minutes should do. Wait, now I'm confused. Hold on. The thing I'm trying to demonstrate to you about this is just because it closed here does not mean that, and now you're not seeing anything to the top side, that doesn't mean the market didn't push further up, okay? So let's go to that 30-minute. Hopefully it shows what I'm talking about, Claire. Right, look at this square here. See the square? See this top side? That's where that bar closed. But you notice that the market still continued to push up for about 14.2 pips. So why didn't it just create a new brick? The reason it did not do that is because this is only 13 or 14 pips. Okay? Not 25. If it was 25, then it would create a new one. So why am I pointing this out? Because those of you who would prefer to trade from external to internal, you could take advantage of this. If you have reason to suspect, so let's look at this, because again, the same principles of price hold. You've had these multiple highs here. No doubt they've probably wicked above them, okay, a little bit, but just wasn't up to 25 pips. And then you now have the market fully taking out these highs with a closed brick. You might now think to yourself, there is a chance the market may want to go down. You don't know for sure, but there's a chance. So what could you possibly do? Maybe you go down to a low time frame, like maybe, I don't know, maybe 15 minutes, maybe 5 minutes. It's up to you, right? Maybe your decision to sell is based on, okay, we now have this swing formation here, 1, 2, 3 upon the close of this candle. Let me sell and see what happens. If we can get maybe about 25 pips. Why 25 pips? Because that's the size of the original Renko brick. Or maybe you want to go down to a 5-minute chart. Let's see how that would have played out there instead. Here's the 5-minute. What do we have? Pay attention. We have this low here. It got broken. As soon as it got broken, what happened? It left behind an order block. Something I forgot to say, which is very crucial. If you have 2 candles consecutively, same direction, you can mark both of them as your order block. So as soon as that happens, you can say, okay, I'm going to have my pending order here. And then this gets tapped. Your stop is there. You're targeting this or 25 pips. That's one other thing you could have done. Or if you wanted to go even lower, I don't recommend it. But that's because just me personally, I've gotten burned a lot on the 1 minute. If I'm not, hold on, where is it? Ah, there it is. Okay, cool. This is the 1 minute here. What do we have? We pushed up and up and up. We had this low here that got broken. Multiple fair value gaps, but nothing. I typically don't like when I see this kind of price action. I'd rather just wait for a brand new FVG to form, the new break in structure and everything. So what do we have here? This low, this low, this low here eventually gets broken. Now these series of 3 bullish candles in a row are now part of your order block. So we can have a pending order here, your stop loss here, and then you're looking to take profit at 25 pips or less, because now we've already made quite a journey to the downside, if you understand. So why did I bring all this up? Because you might find, some of you might find that this is less confusing for you than a range bar chart. And you can make a whole strategy of this, which is, okay, first of all, we pick a high enough range for whatever pair it is we're trading. Secondly, after picking that high enough range, all I'm going to do is say to myself, I'm setting an alert at the high, which means if the market does not retrace into the high, I'm not interested in the trade. This is for sells. If it's for buys, it's a matter of unless the market retraces to the low, I'm not interested in the trade. Or some of you may say you just want 50% of the brick itself. Why am I saying highs and lows specifically? Because again, these are Renko bricks. And as you already know, like I've shown you, it is possible that just because the market closed here, opened here, and you're not seeing anything up here, that doesn't mean the market did not pull back. So it's now up to you to decide, what is the area you're interested in? Are you interested in the halfway point? Okay, cool. Are you interested in being an external to internal liquidity trader? Okay, cool. But either way, you're not always going to have a setup. You need to make peace with that. Okay? So, let's see. I learned a lot. Good. Okay. Add link tree will do. Geez, is the Renko showing only on the daily? No, no, no. So the Renko chart is actually, it's not a daily thing. It's a price based chart. So it does not, if for some reason, okay, like what is today's day? 24, 25th, if the market's open and it's as slow as I think it'll be, if it takes the whole day for the market to push 25 pips, you will not get a new brick until the market pushes 25 pips. It could take 50 days, it doesn't matter. If the market has not moved 25 pips, you won't get it. And it's not like 25 is the only one. You can set whatever you want to. This platform has anything from a 1 pip Renko all the way down to 2,000 pips. For those of you, I think that 2,000 would be useful if you're trading crypto or something, or certain indices. Yes, exactly. So when you are trading a rate on liquidity, it's quite literally you're trading from external liquidity to internal or beyond. That's literally it, guys. I really wish I could do some MT5. This is what you're familiar with. Naf, you right now, Google, hold on. Let me comment it. I don't know. EA, it should be an EA, I guess. MT5 EA Renko generator free, and then maybe we add in Forex Factory or something. I don't know if you'll find something, but good luck. Also be mindful with testing. Don't go live, please. Test that thing on a demo. Make sure it works how it's supposed to work. Please. Thank you. The range, it's the same thing. You can still do it. The range is the range bar chart, same thing. Just change the Renko to range bar. Same difference. Even if you don't want to use either, you can use regular time. You can use time-based charts. Just make sure you're going high enough for whatever pair you're using. This is CTrader. Yes, this is CTrader. This is CTrader. So remember the question I asked you after I was done with the first part of the presentation. If this is all you get, 1, 2, 3. 1, 2, 3. Is it going to work all the time? No, but it works enough times. Now you know, okay, brief directional bias. 1, 2, 3. Okay, maybe. Not all the time, but enough times. Notice 1, 2, 3. Oh, this maybe didn't work out. This one. Who knows? Maybe it would have given me 6 pips, but like if you're gunning for more than that, no, probably. I don't know. I'd have to go down. I don't want to start scrolling back. 1, 2, 3. It happens enough times, and then also if you're not being greedy and you only trade once in a while, you don't need to always be in the markets. There's no reason you shouldn't be able to tidy up. Especially remember what I explained to you. Remember what I explained to you. See, I'm seeing entries. What I explained to you before. You don't need too much. I would rather, this is that, there's this saying, or is it a story? Or what is it? I think it's Bruce Lee. I'm trying to remember who. I fear the man who has practiced one kick 10,000 times more than someone who has practiced 10,000 kicks one time. This is it right here. This is it. And this is part of the reason I told you guys I prefer pairs that move a lot. GBP CAD is such a drama queen. GBP NZD as well. You see a lot of these swings, they happen very consistently. Now, if you're still getting used to things, of course, personally, I would not trade just the plain Renko. If I mark out an area, I'll then go to, which is what I do with the range bar chart. I don't look at Renkos, I actually look at the range 50. Okay, but if I was forced to use a Renko bar chart, I would just mark out the square I'm interested in. Then I would go to the 6 hour and start looking at things. Is this a reasonable place to actually be looking to sell or to buy before I do anything? Okay, I've done enough. So thanks for being here. I'm going to take off now. Everybody be good, trade safe, be safe. Don't let anybody scam you. Thank you for the follows. Thank you for your time. Appreciate you. The video will be up on YouTube between now and tomorrow. The link as well will be there for the free ebook. So alrighty. Thank you, Clamcrypt. It's fine. Anthony Z, sure, I'll accept your request. All right, that's about it, everyone. Trade well, trade safe. May the markets be with you. And remember, you are luck. You're a winner. You've got this.